UNEP FI has a vision of working with the leaders in the financial markets across banking, insurance, and investment to help to repurpose the role of finance in society, to regain the trust of customers from clients, and to drive this notion that financing is there to drive the real economy, and the real economy in the future, which will be sustainable, resilient, and low carbon. So UNEP FI is a group mostly of the larger financial actors, both within developed markets and emerging markets, working to address some of the biggest challenges that are faced by society. The UN relationship of the partnership is really out in defining what are societal goals and the nature of the Sustainable Development Goals, the action to address climate change. So UNEP FI is a partnership between the UN and the financial community to drive understanding and to come together to both contribute to financial markets development in a more sustainable way, but also to help regulators to understand if and where regulatory action will be required, and if so, that is done in a way that is aligned with or cognizant with the needs of the market. So going back a little bit in time, in 2006, our group of asset managers commissioned what was called the Freshfields Report, which was the first time looking at the notion of fiduciary responsibility of investors to take into account environmental and social and now climate issues into their investment decision making. This led to the establishment of the Principles for Responsible Investment, which we co-launched with the UN Global Compact. Today is a very important organization. It is responsible, or has a signatory base representing about 70% of institutional investors globally, and helps define essentially what is market practice around the notion of responsible investment. 6 years later, in 2012, we worked with the leading insurers to establish the Principles of Sustainable Insurance, which is a similar framework structure that frames how a responsible insurance organization on the underwriting side can define and respond to sustainable development needs in their industry. On that trajectory, on defining the structure from a principles perspective of the financial industry, we're now working with a group of banks who are developing a similar set of principles for responsible sustainable banking, to be determined in terms of the actual title. And it will once again frame at the highest level what are institutional responsibilities when we look at a future which is going to be more sustainability driven. We have many other types of actions, and one example is the FSB, the Financial Stability Board, launched a task force looking at climate disclosures called the Task Force on Climate-Related Financial Disclosures, came up with a set of recommendations on how corporates and actors in the financial industry should be reporting on climate risks. So UNEP FI has been working with the leading groups of banks, insurers, and investors to launch essentially frameworks on how they're going to follow through. And very shortly, the group of banks will be launching a methodology for how banks should be reporting on climate transition risk, one of the most challenging aspects of disclosure, because you need to start to look forward in terms of understanding scenario analysis and stress testing to understand exactly what will be the future, what does it mean from a credit perspective, what sort of industries and what part of the industry should we be dealing with if we want to maintain a credit-worthy client base moving forward into this new sustainable economy. So in terms of where we're seeing things moving forward in future, we've built up the capacity to understand, identify risks of a transactional nature. But now where we're seeing things move, as governments, the UN, and the markets are starting to shift towards more of a holistic understanding of the needs, the systematic needs related to low carbon and sustainable development. We see the need for institutions to start shifting from a transactional focus to an institution-wide. So what does it mean not only to have green transactions, to be a green institution, to be a sustainable institution? So it's this more institution-wide, which starts from the governance on down to the operations, and eventually actually being able to measure the impacts of your portfolios. So issuing, for example, green bonds are great, and there's been a lot of progress there, but then it begs the question, what about the rest of the bond portfolio? And when will you start to actually set targets and to saying over time, in terms of fixed income bonds, in terms of our public equities or alternative investment instruments, or the broad range of credit portfolios, when can we start to set targets within an institution and follow through in terms of those targets, in terms of greening our operations? So we're starting to increasingly talk, whereas in the past, where it was very much about risk and then risk and opportunity, now we start to talk about the notion of alignment and consistency, which means if we're going to get, from the UN perspective, strategies to phase out carbon, as an institution, what is your overall institutional approach to carbon across your portfolio, your approach to social issues, to human rights, etc. So understanding the broad panoply of issues and figuring out how as an institution we're going to align with essentially the needs and the opportunities of a more sustainable future.